Good afternoon and welcome to another episode of Money Matters TV. I am your host, Jeff Watkinson of Watkinson Capital Advisors. Today, my co-host is Doug Bloom of DAB Ventures. Welcome, Doug.
Welcome, Jeff. Thank you for having me.
And we have a very special guest, Tom McManimon of Stimulus Brand, who will be joining us later. But first, I want to talk with Doug. Doug is the founder of DAB Ventures. And Doug, I was going over your LinkedIn profile, and it seems like you're a thinking partner to business owners. You help businesses grow their business, exit their business. I had a question about your profile. There's this EPA, this acronym EPA, Value Acceleration Methodology. Can you shed a little more light on that? I don't know what that means.
Yeah, it's actually CEPA, CEPA, Certified Exit Planning Advisor. And CEPA is based upon the Value Acceleration Methodology created by Chris Snyder. Bottom line, CEPA or VAM is a way of looking at a business along two different paths, along the personal financial space and along the business space. And you go down two parallel paths in order to maximize the value of a business, so the business owner has an opportunity to have optionality when they get to the end of their time with their business, to either transition it the way they want to, or to continue to grow up it as a passive owner.
So the business owner is looking how to make their business more attractive, more profitable, better multiple. And this is for a business owner with or without a succession plan?
Yeah, it's to help them develop a succession plan. Most business owners get caught up too much in their business on a day-to-day basis. They block out employees they could develop into people that can help them run the business. Every client or customer seems to have to work their issues through the owner. The goal is of value acceleration methodology is to help drive the value in the business by making the business more transferable and because it's more transferable, it's more valuable to an outside buyer. It's also more efficient to run.
What size businesses do you work with? What are some of the professional what type of businesses do you work with, and what are the sizes?
Business services, some product companies, businesses in the 2 million and up range, starting out working with them at $5-10 million. Hopefully they grow to $20 million or more as we work through the process. The industries, I'm agnostic. I've worked in a dozen different industries, and so we're really focused on talent, culture, structural assets such as SOPs and accountabilities and cadence. And we're looking at the customers and ideal customer profiles and reasons why customers buy.
Please tell me in the audience what an SOP is.
Standard operating procedure. Sorry.
Okay, standard.
Yeah. Sorry about that.
What would you recommend to a business owner right now? Whether they're growing or exiting?
Get a sense of what your business is worth realistically, not just what you hear at the country club. Figure out what the weaknesses are in your business and start working on them. And then to do that, get an advisor or three. Every business owner should probably have a financial planner. They should probably have a lawyer and accountant. They should probably have a value advisor, somebody like me.
Okay, great. Thank you.
So I understand you're in the bond markets as an advisor and as a manager for clients. Is that right, Jeff?
Yes, sir. We're a registered investment advisory firm. We're based in Berwyn, Pennsylvania. Our specialty are superpowers municipal bonds, both taxable and tax exempt.
So my understanding of the bond market comes from a short period of time. I was working with Salomon Brothers way long ago. And the running question of Salomon Brothers is, what's the difference between a bond and a bond trader?
What is it?
a bond eventually matures. So. Where is the value in today's bond? Where is the value in today's municipal bond market?
Well, right now we have a very normalized yield curve, which means it's upward sloping, which essentially means bonds in the shorter end of the curve, bonds maturing within a year, 2 years, are yielding less than a bond that matures, past 20 years, 25 years. So where we're finding the value right now is bonds 20 years longer in maturity, priced to a 10-year call feature. And there we're finding yields around the 450. I bought a bond today at a 467, a Pennsylvania school bond, highly rated. And for a high earner, a 467 yield for a Pennsylvania resident, that income is triple tax exempt. We're looking above 8% tax equivalent yield. Essentially, we're earning an equity-like return in a Pennsylvania public school, and that's where we're finding the value.
The 4.67% equates to what as on a regular income stream?
A tax equivalent yield for, let's say, a high earning Pennsylvania resident. The back of the napkin, multiply that by 1.75, which puts us right around that 8% tax equivalent yield. What that means is you would have to earn above an 8% taxable yield in a corporate bond to beat that. That's the calculation. That's how you. I'm only earning 4.67, but the income is tax exempt.
Yeah, and I don't want to get into the 4% rule and what it means and why it is, but bottom line, the 4.67% is beating the 4% rule, which is a good thing.
Yes, sir. Absolutely.
So if an investor wants to buy bonds themselves, what should they be considering?
Well, you have to understand the credit system, and you have to understand if you have a brokerage account, if you're doing it yourself, you really have to understand that you're the last buyer. If you want to sell that bond, the bid you're going to get on that bond is going to be lower than essentially what you paid for it. And I think the other thing is you got to look at coupon structure. I can't get into all the details right now, but I mean, we like the big 5% coupon or more bonds that trade at a premium, as opposed to a 3% or 4% coupon structure where the bonds trade at a discount.
So just to put it in layman's terms, municipal bonds are often bought by people who have high earnings so that they can buy an asset which gives them solid yield, which is not taxed. And so who is buying bonds like that?
Well, we're naturally seeing wealthy people buying bonds and people who are adverse to paying federal, state, and local taxes. We see people who have retired, who are elderly. We see people who have other investments in non-liquid asset classes, whether it's real estate, private equity, hedge funds, and this is their stay rich bucket. Municipal bonds is where prudent Americans have stored and protected their wealth for generations. That's a great question, Tom. I really appreciate it. Now it's time to go to our question. We have Art Hampton from Philadelphia. What are a few ideas to increase sales using social media?
Well, I'll take a stab at it. But using social media, what you want to do is you want to sell through by affiliation. You want to basically utilize your connections as well as you can. Some of the ideas that thinking about the question was trying to build up traffic. You can run a flash sale to build up traffic and build up new subscribers or new followers rather. You can use short form videos such as TikToks to showcase your products, and that's probably the most common or highest reach format right now. You can leverage your partners' network, your partners' content, and repost it. But bottom line, what you're trying to do is you're trying to build traffic that isn't innately yours, and then you can leverage other people's efforts to build your awareness of what you're selling and what you're providing and the quality of your products.
Thank you. I appreciate it. Here's how to send in your questions to Money Matters TV.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Welcome back to the show. Now it's time to bring in our guest, Tom McManimon of Stimulus Brand. Tom, welcome to the show. Tom, tell us the importance of brand awareness, and tell us about how you founded your own company, please.
I worked for multiple ad agencies in the city and in New Jersey, and an agency that we grew from 2 million to 180 million got sold. And as the deal was consummated, we were then out of work. So, we built the agency and then it got sold and it said, thank you. Basically, I was out of a job. So I had spent all my career working in big agencies as a creative director, and I started my own. So here I am 24 years later, and maybe I can lose the title reluctant entrepreneur finally, right? So I started my agency, and I wanted it immediately to be about the big picture brand. My whole audience had been with the C-suite and those thinking very big picture about their company. And so my whole perspective wasn't just about creating the work in all the media, all the award-winning work in the TV and the web design and all of that media, but it was first and foremost about your company and your culture and the alignment of all the different divisions and groups in your company, and the positioning for your business, and the people who take the time and the energy to think about and really plan their positioning are going to have a long-term, place in their marketplace. They're not going to have to keep reinventing themselves every year.
Yeah, I took an MBA class at Drexel University, and I remember the professor stressing how important the brand of your product or service is. And could you expand upon just how critical that is?
Well, they say that in real simple terms, marketing is like asking someone on a date, and branding is the reason that they say yes. Okay, so your brand is all about what makes you unique, the way that you conduct yourselves, the way all of the people in your company, from the very first touch point to leadership, to staff, to sales, the way that they all interact with potential customers or your actual customers. And that's the fiber of your business. Your brand is not your colors, it's not your typeface, it's not your logo. Those are the ways that you dress up what is the reality, the experience. So it's really about the experience that you create for your customers, and does it ring true with them? So something that they see and hear from one interaction, and then they see and feel something in a commercial, and then they're approached by a sales team, the various other touch points. The more that you create synergy, it becomes clear to people who you are and what you stand for, and the experience becomes memorable to them. So your brand is really about what you make people feel. And in the end of the day, I always say Your brand is what people will think, feel, and say, and even write about you when you're no longer in the room. So if you think about that, it's the foundation, and your marketing is now how you implement your brand. So there's a lot of people that have such a sense of urgency because it's down the totem pole, right? And so all of a sudden we need to revamp our website, or we need an outdoor board campaign across the nation, or we need a social media plan. We don't even know what that is. So they're all thinking executionally. And the more you can help them take a step back and look at the big picture, without getting into too deep, one of the greatest brands out there is Nike. And that wasn't about selling sneakers and tennis gear and golf shirts. It's a spirit and an attitude that anybody, no matter how big they are, how heavy they are, how old they are, no matter their walk of life, they can be anything they want to be and do anything they want to do if they just get off the couch, get off their fanny, and get out there and just do it. And by extension, they sell a billion, merchandise, a billion outerwear and sneakers and all of that. So that's an idea and a feeling that makes people want to have that. I want to have that product. And so when companies make the effort to do that, man, they can have huge gains, not just the immediate sell of a product.
So Tom, you said you were a reluctant entrepreneur. I always tell people you don't know you're an entrepreneur until you've taken out your own trash. You built a small boutique after running a very large organization. What were the challenges with that, and how did you go about building your brand for your current business?
The foundation of the idea was, I called it Stimulus Brand. I didn't call it like a lawyer would with my name on the door, because everything that we do is supposed to be geared to stimulate the activity that you expect for your spending. So it should drive people to your website. It should make someone pick up the phone, have a meeting with you, or if it's retail, step across the threshold. Everything we do was about stimulating the action that your marketing spending is supposed to be about. It was dramatically different. But I started a design company from zero, and we got to 2 million. And so I knew back then, about 25 years ago, 30 years ago, that you got to wear every hat and you just got to do it. You just can't complain that I don't have that person to help us anymore. You just got to do it. And you find that if you just get very disciplined in your time and the use of your resources, you get the tough stuff done. You get it out of the way, and you become a decision maker. You make decisions like that, and you learn from your mistakes. Every entrepreneur, they always say the 5-year thing. If you make it past 5 years, you stand a much greater chance of doing well and surviving, and that's because you got through mistakes.
And so that's kind of a great segue. What are some of your most memorable mistakes you've made?
We had that in a networking group that I run. That was our question of the day. I won a very, very big accounting CPA firm business that we served for 3 years. And then they wanted to do a rebrand. And of course, we were the incumbent. We were in the review with other agencies. And I made the very bad assumption, practice what you preach. I made the assumption that they were looking for just a refresh of the messaging and a refresh of the look and style of what we were doing for them, when in fact they were looking to do a complete rebrand, as I now explain it to people, about their culture. And another agency won the business, and there was no bitterness. It's just I looked at myself and said, that was such you were full. I needed to do the discovery that I always do with other clients. But just because they were an incumbent, I didn't do that. Yeah. And there's others, there's other mistakes along the way.
Cutting corners is sometimes expedient, but it also sometimes costs us. And
yeah,
that's when you learn where the push is and where the push is not. So
yeah, I mean, other mistakes, but hopefully the victories outweigh the mistakes, right?
Tom,
I lost two major clients in the same week, right before Christmas one year, and they were our two biggest clients. And I thought, oh my God, honey, to my wife, I said, what are we going to do for the holidays? But then the second week of January, I got an RFP by Prudential. And we won that business and served them for 10 years.
Very cool.
Wow.
Yeah, you
Tom,
got to have a lot of faith. It's a lot of ups and downs, and you just have to have a lot of faith and press on.
Yeah,
Tom, you mentioned
you got to have a process too. Sorry,
Yeah.
Jeff.
that's okay. The process, Tom, you mentioned discovery. What is that discovery? I mean, define what discovery is. I assume it's talking to the client, but describe what that is, what that process is like.
It's a
And
process that, I might go into a company and like I said earlier, they might be thinking executionally. And I ask them, can I talk to 10 of your people? Or can I, like when we won the Prudential business, I said, can I talk to 20 of your brokers from different parts of the country? And we can formulate the questions so that I can have an interview with them, but then it's just me and them. It's no one else from management in Prudential. So we had these tremendous conversations, and they all came at it with different perspectives because someone leading a market in Dallas and someone in Miami and Chicago and New York City, they all have different perspectives, and that was their mortgage financing business. So you learn a lot. I learn about the business, the services, the perspectives of different geographies and markets. And management learns new feedback because it's kind of a way of getting feedback from your key people. And so it's a discovery process. And in that, I always have a line of questions that have more to do with your brand personality. Describe for me your company and a personality. And if you had, to describe what is the color scheme that you think feels right for your business, or the tonality of, are you an aggressive or are you a quiet listener? I'm really searching for 20 questions from different people at different levels to gauge, are they on the same page? And if they're not, what parts of the company are humming? What parts just need a little tweak here or there? And what parts need to be completely reinvented and thrown out in the bathwater? Because the key is you have to get everyone on the same page and excited about what is your brand. And when they're not on the same page, you create a disconnect with the customer. And no one really in the marketplace, whoever your customers are, they don't care about how you're organized, and they really don't care about how you run your business inside the doors because it's about them.
so
So,
Tom, I'm
okay.
sorry. Go ahead, Doug.
I was going to switch gears on you a little bit. It's a big bad world of AI, and I was wondering how AI is going to affect your business, and what do you think the future of getting the discovery sort of situation that you just talked about? What's AI going to do to discovery? What's AI going to do to producing content and brand images and
AI
brand
is
strategy?
completely, it's like a tidal wave, and you better ride the wave or you're just going to go under. We've just had, that was our topic in the networking group this morning too. It's funny. It speeds up research, it speeds up creativity, but you cannot miss the element of authenticity. So you have to question what you get from AI. You have to prove it. You proofread, you have to bring your own thoughts and feeling into what it feeds you. It's a mechanism, it's a set of tools to help you go in a certain direction and do it quickly. There's a whole number of things that we've done over just maybe 6 months to a year using different AI tools that have been great thought starters, but you just can't be lazy and pick it up and say, well, that's my answer. That's the creative. We don't even need to do anything. You can't go there. You have to put your own flavor on top of what it starts for you. It's only going to keep evolving, God, almost week to week. It's so fast. And you have to be the driver. There's an author, Mark Schaefer, has a tremendous book called Audacious, and it's all about humanity getting in front of AI. So AI is going to be our greatest asset, but the people who will truly break through with fresh thinking and new innovations, it's because you know how to drive AI as a tool.
Cool.
So, Tom, we're coming near the end of the show, but I understand you've written some books. I think it's a
Yeah.
great time to give you a plug here.
Well, thank you. Yeah, I mean, I've got 3 books and a fourth one in the works. The first one's called The Position Player, and it's told from the perspective of a football team that couldn't win a game in 4 years, and then finally they became state champs in 1 year. And it's really learning about your competition and all their ins and outs and all their idiosyncrasies and how to really, coach that one game and then the next game, the next game. But it's all about brand positioning. And then the second one was a personal branding book called The Stuff That Sticks, and it's all about understanding yourself more than anybody else. I did a third that was a combination author book. So there's a whole host of authors that have good long story chapter, and that quickly became a bestseller. And then the fourth one I'm working on is going to be called The Position Playbook, and it's specifically about branding and brand positioning and a number of lessons. There's a ton of takeaways in every chapter. And I have about 70 to 80% of the content. I just have to get away from work so I could put it all together.
Maybe you can use AI.
Yeah, well, I'm going to. I'm actually going to filter in sections so I don't overwhelm and blow up AI, right? And see how it blends and makes things flow. And then I'll look at it and go, okay, I didn't think of it that way, but you know what? That doesn't sound like me. So then I have to make it sound
That's
me.
the challenge.
That's what you got to do. Yeah.
Yeah,
But I mean,
I write them.
And I really only am writing the books to give me more credibility and visibility when I speak, because I do keynote speaking as well. And I'm not trying to, be a big time author and make lots of money with it. It's really to get opportunities to do what I do with branding and marketing.
What type of keynote speeches do you give?
Well, I give one that's a brand positioning workshop. That's a live workshop to help business owners know where to go with their positioning, and it's a snappy, fast workshop. The other 2 that I've been giving are more motivational talks, and one is about resilience and renewal, and it's really helping people that are either going through or have gone through extraordinary crises. And I've been through some unbelievable crises that most people would say, I don't know how you get up every day. I've been through some pretty extraordinary crises, and I use some of that in that story. And it really is, I've spoken to 600 people, 300 people, and 10 people. And another one is about work ethic. I mean, who has work ethic today? Where's it gone? And I cite a number of examples, depending on the audience, where we magically think that people, who are hugely successful, were just magically imbued by God up above to be special. And no, they work at it. They really, really work at it, I mean, I've seen Steph Curry made 10 shots from half court in a row, and the only reason he didn't make 11 is because he went to another part of the court.
I think I really appreciate you being on today. Thanks for sharing your insight about branding and positioning. And yeah, this is the end of the show. Our next guest is a very special guest. This is for the next episode. This is Armando Patoja, financial futurist, Pax Capital, and we're going to be talking more about AI and crypto. So I want to thank my co-host, Doug, and have a great day.